Welcome to the deep dive. We're here to help you cut through, well, all that financial noise. You know the feeling, just drowning in news alerts, market updates, endless expert opinions, trying to figure out what's really going on. It's easy to get lost, right? Or, maybe worse, make big decisions based on, well, noise instead of actual signal.
Exactly. And that's really our mission today. We want to slice right through that. We're going to pull back the curtain a bit, show you how one specific top trader approaching the market.
Hmm.
It's all about filtering out those distractions, focusing on what really drives strategic choices.
Right. And today we're taking a really deep dive into Robinhood Markets, ticker HOOD. Now, it's not just that popular app lots of people use. It's actually a really fascinating case study right now. It shows how a company can, adapt, diversify its business, navigate these really volatile market currents. We're going to unpack a very specific detailed analysis from a trader named JinLog, and they use this unique method called the VPA rhythm trading method. Sounds interesting.
hmm And this isn't just about like where HOOD's stock price is today. It's a chance to really get under the hood, understand the mechanics of a market correction, why it happens, how you might respond. We'll explore the thinking behind this specific strategy they mentioned, split sell and staged reentry. And crucially, how Robinhood's own business moves, their strategy feeds back into the stock's performance. It's a whole picture.
Okay, so our mission for you listening is pretty clear then. We want to pull out the most important bits of knowledge from this analysis, help you understand the what, the how, and maybe most importantly, the why behind what's happening with HOOD and these strategies. We'll look at Robinhood's current situation, the specific trading tactics laid out, and yeah, those fundamental business developments that are driving things long term.
And a big part of that is understanding this VPAR method JinLog uses. It's kind of a blend. It looks at the overall market flow, the rhythm, you could say, and then zooms in on these things called MAC points, basically, major support or resistance levels. The whole idea is to manage risk first, define your potential downside, but still aim for higher returns while avoiding that trap of overtrading, reacting to every little thing that just eats away at your capital and your time, right? It's about being more surgical.
So what's the takeaway for you, the listener? By the end of this, you should have a much clearer view of Robinhood's market position right now. You'll get specific, actionable insights from this expert analysis stuff you might not just read in the headlines, and hopefully a better way to think about complex financial info, a more structured approach. Think of it as maybe a shortcut to getting really informed on this topic without digging through everything yourself.
Yeah. You'll see how all these different pieces can fit together. Financial flows, news events, even what people are saying on social media, the community sentiment, plus technical stuff like Elliott wave analysis. It all gets synthesized into a strategy. So you get more than just news flashes, you get context. And maybe some critical thinking tools you can use elsewhere too.
Okay, let's get into it then. Robinhood Markets, HOOD. To set the stage, let's talk about the big picture first, their recent performance. Most people know Robinhood, maybe use the app, but did you realize just how much of a, well, standout performer it's been lately? It's quite something.
Oh, absolutely. It's been phenomenal, really. Year to date, the stock has soared over 180%.
Yeah.
That's huge. It puts Robinhood right up there with the top performers in the entire Russell 1000 index. So we're not talking about a small jump. This is a really significant, sustained run that's definitely caught the market's attention.
Okay, but here's where the plot thickens, right? Especially if you're watching HOOD or similar stocks. Despite that incredible climb, this analysis we're looking at says HOOD has actually entered a correction phase. That started back around its early May swing high. So what does a correction actually mean here for HOOD?
Right. So a correction usually means a drop of, say, 10% or more from a recent peak. It's often seen as, well, kind of healthy. A pause, a consolidation after a big run-up, lets the market catch its breath. For HOOD specifically, the analysis puts it trading right now around $106.45. And that price is sitting inside a pretty defined range, what JinLog calls a box range, between 104 and 107.7 cents.
So just sideways movement, indecision.
Pretty much. It signals a period where buyers and sellers are more evenly matched. Consolidation. But JinLog's analysis suggests it's maybe more than just profit-taking. It's potentially this mix of disappointment, we'll get to that, and maybe some insider signals. This range, plus the stock's average quarterly volatility being around 9.9%, confirms this correction phase. And that's exactly why a strategy like split sell and staged reentry comes into play. It's designed for this kind of environment.
Okay, so why now? After such a massive run, why is this correction hitting right at this moment?
The source points to a couple of specific things, right? Events that probably shifted sentiment.
Yeah, two key events seem to have really kicked off this near-term selling pressure. First, the failed S&P 500 inclusion bid, that was on June 9th. Getting into the S&P 500, that's a huge deal for any company. It means automatic buying from index funds, huge visibility.
Right, massive institutional demand suddenly appears. Exactly. So when the bid failed, the stock immediately plunged about 6%. Now, it did climb back into that box range support level afterwards, but that initial drop showed real market disappointment. It's like a psychological knock, maybe suggesting it's not quite in the big leagues yet in some investors' eyes.
And the second event.
That was a pretty large insider sale. A board member, Harnett bought, sold shares worth around $42.6 million. Now, insiders sell for many reasons, personal finances, diversification, whatever. But a sale that big, the market often reads it as a potential signal. Maybe someone close to the company sees less upside right now or thinks the stock is fairly valued.
Yeah, it makes other investors pause, think, what do they know?
Precisely. So you had the S&P disappointment, then this big insider sale. Together, they likely acted as catalysts, amplifying the selling pressure and pushing HOOD into this current corrective phase.
Okay, so this analysis comes from JinLog using this VPA rhythm trading method. It doesn't sound like just another technical indicator. It seems more systematic, maybe even philosophical.
I think that's a good way to put it. JinLog really emphasizes that reacting to every little news blip, constantly trading in and out, that's a recipe for trouble. It erodes your capital through bad trades, and it just burns up your time and mental energy. I think we've all felt that urge to do something constantly when watching markets. The VPAR method is designed specifically to fight that urge.
How does it do that?
Well, its core idea is to first capture the timing of the overall market flow. Understand the big picture, the rhythm. Then it focuses attention only on key news or events when they happen at these specific levels JinLog calls MAC points. Now, these MAC points aren't just simple support lines drawn on a chart. It seems JinLog's method involves more complex factors, maybe volume analysis, institutional order flow, what they call market memory, from the rhythm itself. So a MAC point like $92 for HOOD isn't just a past low. It's identified as a spot with a high probability of significant institutional buying interest stepping in, a potential price magnet.
Okay, so it's about precision, avoiding unnecessary trades, being very selective. What does that actually mean for someone trying to stay informed but not get totally swamped by all the data?
It means being disciplined. You're not glued to the screen 24/7. It's about blending that broad analysis, understanding the sector, the company's fundamentals, with real-time monitoring of the overall market index, understanding the tide, basically. The goal is proactive risk management, defining your potential loss before you even think about the potential gain, and then acting only when you have a high conviction signal, often at those strategic MAC points.
So it's about noise reduction.
Exactly. VPR tries to achieve that by filtering out the day-to-day chatter. It focuses on the market's rhythm, those cyclical patterns. It combines it with the MAC points, those critical price levels. The idea is to isolate the really meaningful signals from all the background noise. So you ignore the minor wiggles and focus only when major trends meet key levels. Saves capital, time, and honestly, sanity.
Okay, so we understand the situation, HOODs in correction, and we have this VPA method. How does JinLog suggest acting on this? The core strategy mentioned is split sell and staged reentry. Can you break that down? What does it mean and why now for Robinhood?
Sure. It's essentially a risk management tactic for volatile times. You want to protect gains or limit losses, but maybe not exit entirely. So split selling means you don't dump your whole position at once. You sell portions, maybe as the price rallies briefly or hits resistance, like near the top of that box range, around $106.45 for HOOD right now. This lets you lock in some profit or reduce your exposure incrementally, de-risking step by step.
Okay, that makes sense. And the staged reentry?
That's the second part. After you've sold some, you don't just jump back in at the first sign of a bounce. You wait, you monitor the market flow, watch how intense the correction is. You're looking for clear signals that the selling pressure is really fading, and ideally that the stock is finding strong support, maybe near one of those MAC points like $92. It's a patient, tactical approach. You avoid panic selling, you avoid blindly holding, and you plan your reentry carefully. It's about control in a choppy market.
So for someone looking at HOOD right now, maybe thinking of buying in, what's the immediate advice from this analysis? Is it go time?
Definitely not, according to JinLog. The analysis is very clear. Short-term entry is not recommended while this correction is ongoing. If you already own HOOD, the focus should be on managing that position using the split sell idea. But initiating new positions right now, the analysis advises against it. The short-term rhythm analysis shows weakness in correction. even if the bigger trend looks okay.
And what about the funds flow part? It says initiating forming for the short term. What does that mean?
Yeah, that's an interesting signal. Funds flow initiating forming suggests the very early stages of new money dynamics. Think of it like the first subtle signs that bigger players, maybe long-term institutional money, are starting to quietly build positions. It's not a strong wave of buying yet, more like the undercurrent starting to shift. It implies that while the short term is still choppy and correcting, there might be foundational buying happening underneath. But it also means immediate entry is still risky until that flow becomes clearer and stronger. Patience is the word.
Okay, but what about a slightly longer time frame, like a swing trade holding for days or weeks? The analysis mentions a specific entry at $92 and a target around $117. Why those levels?
Right, for a swing trader, JinLog identifies $92 as a potential entry point with a favorable risk-reward profile.
Yeah.
In VPI terms, that means the potential upside from $92 significantly outweighs the calculated risk if the trade goes wrong. They only take trades where the odds are stacked in their favor. This 92 level is identified as a key swing support, a price where historically, or based on their analysis, significant buying is expected to emerge, potentially causing a bounce.
So enter at $92 support.
And if you do, the target for taking at least partial profits is suggested near $117. This strategy aims to catch a rebound within this larger correction. The rhythm analysis for the swing time frame is interesting here. The trend is still seen as accelerating or maintained, but the rhythm, like the short term, is weakening correcting. However, the funds flow is described as converging adjusting.
Converging adjusting.
It suggests the selling pressure is starting to consolidate. Things are stabilizing after the initial drop. It hints that the conditions might be setting up for that potential rebound towards a $117 target.
Right.
So, still cautious, but it offers a specific tactical play off a validated support level, $92, with a defined potential reward, $170.
And then there's the midterm view for longer-term investors. The advice there is different, again, pointing to an even deeper entry.
Yes, for those with a longer horizon, the recommendation shifts to accumulate in tranches at $60. Accumulate in tranches simply means buying smaller amounts at different times or price levels, rather than all at once.
Averaging down your costs.
Exactly. It helps manage risk if the price keeps dropping. And you don't have to perfectly time the absolute bottom. It's a disciplined way to build a position. And the $60 level is chosen because it aligns strategically with Robinhood's major long-term growth drivers. Specifically, the rollout of that unlisted stock trading service and the ongoing momentum in their crypto business. These are seen as the big fundamental value creators down the line.
And the rhythm analysis supports this longer view.
It does. The midterm rhythm analysis is much more bullish, trend accelerating, rhythm rising, and funds flow initiating formation. It's a pretty strong combination according to VPR. It signals potential for sustained growth, making $60 an attractive zone for patient, long-term accumulation, timed with those fundamental shifts.
The analysis keeps mentioning these MAC points, $65 for swing, $35 for midterm, and that $100 target was already hit. How do these fit in? Are they just support resistance?
They are support levels, yes, but within the VPAR method, they seem to be more significant than just lines on a chart. They represent levels where JinLog's analysis predicts significant buying interest based on a confluence of factors, maybe volume, order flow, cycle timing. They're potential floors. So $65 is a key swing MAC point. If $92 failed, $60 might be the next strong bounce zone. $35 is an even deeper midterm MAC point, a potential accumulation zone in a much more severe correction scenario.
Yeah.
Very long-term view there. And the fact that the $100 short-term target was already reached reinforces the current advice to be cautious and maybe take some profits, split sell, near the top of the current 104, 107 level range. These points act as crucial guideposts for managing trades, planning entries, and setting risk levels within the VPR strategy. They provide structure.
That's incredibly specific. How does this detailed view from JinLog compare to what, say, Wall Street analysts are generally saying about Robinhood? Is it way off base or in the same ballpark?
That's a good check. The overall analyst consensus target price for HOOD is currently around $100.50, so that's kind of the average expectation. However, there's definitely a range. There are more bullish analysts out there with some setting targets as high as $125.
So quite a spread.
Yeah, shows differing opinions. JinLog's swing target of $117 fits comfortably within that more bullish end of the spectrum. It suggests that the VPAR method's potential for a rebound aligns with what some of the more optimistic institutional analysts are also seeing. It's not completely out there. There's some shared view on the potential upside, even with the current correction ongoing.
Okay, let's shift gears a bit from the charts and strategies to the business itself. What are the underlying moves Robinhood is making that could drive its value long term? Especially in crypto, you mentioned they're pushing hard there.
They really are making a aggressive move to diversify away from just basic stock trading, which is becoming, highly competitive and low margin. The biggest crypto move was definitely acquiring Bitstamp back in June. That's not a small tuck-in acquisition. Bitstamp is a major global crypto exchange. This massively expands Robinhood's crypto footprint overnight, gives them international reach, institutional
A
capability.
game changer potentially.
Potentially, yes. And they didn't stop there. They've launched crypto perpetual futures in the EU. That's a big market for sophisticated traders. And they've introduced staking services in the US, letting users earn rewards on their crypto holdings. That attracts longer-term crypto investors. These moves are crucial. They're building a whole crypto ecosystem, not just a place to buy Bitcoin, tapping into higher growth, potentially higher margin areas of crypto. It really diversifies their business model significantly.
And then there's this unlisted stock trading service mentioned. That sounds pretty radical. What is it, and why is it a big deal?
Yeah, this could be huge if they pull it off.
Yeah.
An unlisted stock service would let regular Robinhood users trade shares in private companies, companies that haven't gone public yet. Think pre-IPO shares.
Stuff usually only available to venture capitalists or accredited investors.
Exactly. It would essentially democratize access to private markets for retail investors. That's a massive shift. Imagine being able to invest in the next big thing before its IPO through your Robinhood app. It could open up a completely new market for Robinhood, attract a whole different type of investor looking for those early stage, high growth, and high risk opportunities.
Wow. What are the challenges there, though? Regulation? Liquidity?
Huge challenges, undoubtedly. Regulatory hurdles will be complex. Ensuring liquidity, the ability to actually sell those private shares, is another major question. And who would use it? Sophisticated traders, long-term believers. The analysis highlights that JinLog sees this as strategically vital, even calling for an impact analysis on its launch and market share potential. It's clearly seen as a potential game changer for Robinhood's future.
So they're making these big bets on crypto and private markets. Do they have the financial strength to back it up? Can they afford these moves and still handle market bumps?
The numbers look very strong, actually. The financial flow analysis shows robust health. As of the first quarter of 2025, they had $4.3 billion in cash and equivalents. That's a lot of liquidity.
A big cushion.
A very big cushion. Gives them plenty of firepower for acquisitions like Bitstamp, developing new services, weathering storms, and they've been active with that cash. They bought back $160 million of their own shares in Q1. Share buybacks often signal management confidence that the stock is undervalued, and they reduce the share count, which can boost earnings per share. It supports the stock price.
And they did this without taking on debt.
Exactly. The analysis notes they maintain a net debt-free structure. Their cash exceeds their debt. That's a really strong position. It gives them huge flexibility to invest in growth, make more acquisitions if they want, and absorb shocks without being overly reliant on borrowing money. So yes, financially, they appear very well positioned to pursue this diversification strategy.
Okay, but it can't all be smooth sailing. Especially in finance, there are always risks. The report mentions a run-in with regulators.
That's right. No fintech, especially one growing as fast as Robinhood, avoids regulatory scrutiny entirely. The analysis points to a FINRA settlement back in March 2025. FINRA is the industry's self-regulator focused on investor protection.
And settlements usually mean fines, right?
They do. This one involved a $26 million fine, plus about $3.75 million in customer reparations. It stemmed from issues that required them to significantly beef up their anti-money laundering AML programs. While it's a past event and they've made changes, it's a reminder of the constant regulatory pressure in this space. Strong compliance isn't optional. It's essential for survival and trust. Any slip-ups can be very costly, reputationally and financially.
The analysis also brings in something called Elliott wave analysis. This sounds pretty technical. What does it add to the picture for Hood?
Elliott wave is a method that tries to predict market moves by identifying recurring patterns, or waves, supposedly driven by crowd psychology, shifting between optimism and pessimism. It breaks trends down into impulse waves, moving with the main trend, and corrective waves, moving against it. It's about mapping the market's psychological ebbs and flows.
So what does Elliott wave say about Robinhood now?
According to JinLog's analysis, short-term, Hood is in a Wave 2 correction. That fits with the current pullback and consolidation. Wave 2s often retrace part of the initial move, wave 1, and can be tricky with these trap points mentioned spots where reversals might catch traders off guard. But more positively on the swing time frame, it's showing early wave 3. Wave 3 is typically the strongest part of an uptrend in Elliott theory. So early wave 3 suggests potential for a good rebound after this correction finishes stabilizing. And midterm, looking further out, once those trap points are resolved, the analysis sees the initiation of wave 3 on that larger time frame. This points towards a potential major rally maybe starting next year.
So a path forward, correction, then rebound, then maybe a bigger move.
That's what the Elliott wave interpretation here suggests, a methodical progression out of the current chop, assuming the patterns hold. It adds another layer to the timing analysis.
Okay, so we have the charts, the business fundamentals, the regulations, even Elliott wave. What about the people? What are actual investors and traders saying online? Is there a buzz or is everyone nervous?
Community sentiment is definitely a factor, especially for a stock like Robinhood with such a strong retail following. The analysis looked at Reddit. On Robinhood Investing, the main forum for the platform itself, the talk is apparently focused on those big strategic moves, the unlisted stocks idea, and the crypto expansion. And the sentiment there is described as predominantly bullish. People seem excited about the direction.
And what about other forums, like the more speculative ones?
On Rocket Stocks, which is known for more high conviction, sometimes meme stock type discussions, interestingly, even with the stock in correction, the analysis notes many users there are advocating to buy the dip. This shows a really strong belief in the stock's long-term potential among that segment of retail investors. They're not deterred by the current pullback.
So despite the technical correction, there's still a strong undercurrent of retail optimism.
It appears so, yes. And for a platform like Robinhood, that community sentiment can be a powerful force. For better or worse, it's definitely something to watch alongside the other indicators.
All right, let's try to pull all these threads together. We've covered a lot of ground. After looking at the VPAR analysis, the business strategy, the risks, the sentiment, what's the distilled outlook? Short-term versus long-term for Robinhood?
Okay, boiling it down. Short term, the strategy is cautious. Split sell into any strength near the top of the current range, $106, $107. Wait for clear signs the correction is easing before considering new entries. For swing trading, that $92 support level is absolutely critical. Holding it is key for any chance of a midterm continuation upward. Midterm and long-term, the outlook is driven by those fundamental growth catalysts, crypto expansion, Bitstamp, new services, and the potential game changer of unlisted stock trading. That's the bull case. But always have to balance that with the risks, ongoing regulatory scrutiny, and the potential impact of broader market volatility. Those are the main headwinds highlighted.
And it's really striking how the VPR method seems to integrate all of this, the chart rhythms, the funds flow, the news, the fundamentals.
Exactly. It's not just looking at one thing in isolation. The rhythm analysis gave us different signals for different time frames. Remember, short-term rhythm weakening, but mid-term rhythm rising with funds initiating. That shows the nuance. VPR tries to blend those technical chart rhythms with the analysis of funds flow patterns where the actual money is moving. It aims for a comprehensive picture, using multiple layers of analysis to pinpoint what it sees as optimal moments for action, considering both timing and underlying capital shifts.
And beyond just Robinhood, are there broader lessons here for investors trying to make sense of any complex market situation?
Absolutely. I think the biggest lesson is the value of a multifaceted approach. You need to blend technical analysis like VPR, Elliott wave, with deep fundamental understanding, business strategy, financials, awareness of news and events like S&P inclusion, regulations, and even keeping an ear to the ground for community sentiment. Synthesizing all that gives you a much more robust basis for making decisions, and it shows that even during corrections, which can feel scary, there can be strategic opportunities if you have a framework for reading the signals and managing your risks effectively. It's about informed strategy, not just reacting.
Wow. Okay, that was a really comprehensive journey. We went from Hood's huge run-up into this correction phase. We unpacked the split sell strategy, dived into the crypto and unlisted stock plans, explored VPA, Elliott wave, even Reddit sentiment. A true deep dive.
It really was. And hopefully it highlighted how a disciplined, structured approach like JinLog's VPAR method can help cut through all that market noise. It provides a way to assess risk, identify potential opportunities, and make decisions with more clarity, even when things feel uncertain. Strategy over just reacting.
So the final question for you, our listener, what does this all mean for you?
Well, beyond whether you invest in Hood or not, think about Robinhood's journey itself. its explosive growth, how it's navigating corrections now, how it's aggressively diversifying into crypto, potentially into private markets. What does that tell us about how financial services are changing so rapidly? How do platforms like Robinhood keep adapting, keep expanding access, keep trying to democratize markets? And what does that constant evolution mean for you as an individual investor navigating this new landscape? Hopefully, this deep dive gives you some food for thought on those bigger questions too. Plenty to mull over.